I guess we can get started anytime. Yeah, so I'll just go over it again for anybody who wasn't there. Again, thank you for attending this evening. Go grab yourself a drink or a bite to eat if you'd like to. If you put your phone on silent, it'll just be easier for you to take in the information that we're sharing with you tonight. Feel free to ask the questions in the question and answer or the chat box. And again, everyone's situation is different, so make sure that you consult your trusted professionals. Okay, so yeah, what we're going to talk about this evening, we're going to talk first of all is what's been going on in the market, especially during COVID-19 times, and kind of how it's impacted how we do real estate and how we do real estate investing. Tom's going to share with us his story about how he got started himself in flipping homes and also as a real estate agent. What are the 3 pillars to our successful flips? Of course, as we said, our expert panelist Katrina is here to lend her knowledge and share her stories. I said tricks of the trade, but it's just stories that she'll be sharing this evening. And yeah, what are your next steps and then how you would take action, right? So with that being said, we'll go ahead from there, and Tom, take it away.
All right, so before we get into tonight's topic of discussion, the most popular question that Eric and I get on a daily basis is, what's happening in today's market?
How's the market?
How's the market? What's going on there? Everyone's getting rich, right? That's the headline in the Star is everyone won the lottery basically with real estate. This chart here depicts the average price for a home on the Toronto Real Estate Board. And our story kind of starts in 2017, as you'll see here. If anyone remembers, we had a crazy market with bidding wars, similar to today, but I'd say even more extreme back then, where the prices rose 20–30% in a matter of a few months. So alarming that the government in April of 2017, so that's just over 4 years ago now, stepped in and announced something called the Fair Housing Plan. The moment that was announced, the prices went down just as fast as they went up. And you'll see kind of steady increases. That's fairly normal market. And then this big green circle here represents COVID-19 era of real estate. And you'll see here, this is the first dip. This was the first lockdown, I should say, back in March of 2020, when we had about 50% of our buyers remove themselves from the market because really they didn't know what to make of the situation. It was very unprecedented times. But you can see it's fairly short-lived. Once the economy started to open up and people felt more comfortable with what was happening, all those buyers that left here came right back here, and the prices rebounded accordingly. This section here, this is actually 2021. And it's as if on January 1st, everyone came up with the same New Year's resolution: I want to buy a property this year and fast. And why did we see this happen? For many reasons. One, interest rates fell by a significant amount, making it more affordable. We also saw a shift in the types of properties that were being purchased. So there was this exodus from condo lifestyle to something with an office, something with some green space, somewhere I can fit a pool in because I can't go anywhere. So that was partly the reason there too. But you can just see that the prices, what happened was the prices went up so much that they far surpassed what happened in 17. You can kind of see that it took about 4 years to recover from those highs, but we are far beyond that. This chart kind of just compares May 2021 with May of 2020. And if you remember May of 2020, we were in a lockdown. So you're going to see kind of some skewed statistics. But just to show you the difference in activity, you'll see to the far right here. So sales represents the number of buyers that transacted. Last year in May, 4,500 sales. May of 2021, close to 12,000 sales, representing an increase of 160%. Meanwhile, our active listings, you'll see here, only marginally up by 7%. So Economics 101 says when you have a lot more demand, but not as much supply, that causes prices to go up on average 28%. Okay, and then these kind of represent the days in the market. You'll just see that the homes are selling faster. So to kind of get a little bit more deeper is what are we seeing today? So first off, the average detached home is 1.4 million. So as I mentioned, there was this shift going from, let's call it condo lifestyle, or to something with a backyard, something with some office space, and those prices hit new highs. $1.4 million for the average detached home in the GTA. You'll see that right there. Meanwhile, our average condo is 680,000. So what we have seen though is that there has been a shift in demand, because where everyone was going to the detached homes, pushing those prices up, now it's become, we're seeing that people are starting to retreat back to condos because it's more affordable. And you can see that's a huge price discrepancy between the average of the two prices there. So affordability has become very key. And again, condos, last year we saw that were not selling very well. In fact, the prices dipped, but we've seen that the prices have rebounded from their lows, but not fully recovered from the pre-pandemic prices. What do we expect to happen? Again, because of affordability, the prices can only go so much. So for freeholds, detached semis, we're expecting to kind of level off and plateau for the next few months at least. Whereas condos, we do see some further rebounding and some price appreciation, just again because of that affordability that's come into play. And people ask us about bidding wars. I would say that 2 months ago, 3 months ago, I mean, bidding wars were fairly common, and I mean, they were very competitive and just very overwhelming as a buyer. Nowadays, we're seeing that it's hit and miss. They still exist, but it just depends on the pocket, the type of property, how it's priced. So it's not, we kind of always tell our clients, you know what, that sometimes they work, sometimes they don't. And it's really hit and miss. So it's really area property specific. So the other question we get is, will prices go down? You know, is it a good time to buy? I can say honestly that in the short run, it's who knows what's going to happen. It's anyone's best guess. But in the long run, we expect prices to continually increase. I fundamentally believe that anything you buy today will be worth 5 years from now. Okay, in the long run, that's the direction we feel is going to take place. And why? First off, immigration. Immigration has slowed down because of the pandemic. However, the Liberal government wants to bring in over 400,000 immigrants to this country. The majority of them will come to the GTA. They need a place to live. So again, that's a demand there. The pandemic is reaching to an end, people getting their vaccinations, and we're seeing that, again, the economy is starting to open up, travel starting to open up. So again, you can see that there's a lot of headwinds there. Cost of materials for new builds. So what we are seeing is that lumber prices are pretty expensive, cost of materials are pretty expensive. So new construction, if you ever look at any new construction prices, they are really, really expensive. Why? Because the costs are so expensive. Guess what happens to substitute products such as resale homes? They go up as well. There's also continual demand from the millennials. Millennials are actually entering the market and becoming first-time buyers, and that we're seeing that demand coming from there. And there still continues to be supply of property. Right now, we're looking at about what we call 1 month supply of inventory, meaning that if we didn't list any property today, we'll be out of inventory within a month. So just to give you an idea, whereas like a balanced market is 3 to 5 months, this is still a seller's market as it stands right now. And as well, and the last point is pretty important, is the government has been printing a lot of money with all the spending that's going on for all these different programs. When you're printing a lot of money, that goes into everything from inflation to homes to all these different assets, you'll see that the printing of money is only magnifying prices and also the real estate market. So there's a lot of information there. Eric, I know I said a lot there. What are you seeing from your perspective?
Well, to the points that you made, we're seeing the markets kind of plateau in the detached, the semi-detached range. And for that reason, people are going back down to the condos again. But I think that it's a really good point here too, that you have a lot of people who have entered the market who probably wouldn't have been able to do so before, and the interest rates were so, the interest rates were the same way they were 5 years ago. A lot of these people wouldn't be buying these condos right now. And the reason why that is because they would be continuing to rent. So there's been a lot of positives that have come out of this. And at the same time, if you're a buyer in the market right now, it's a little bit less scarier to buy. You might be able to buy something with a condition at this point in time. You might not have to compete against 20 other people. You might have to compete against 2 other people. So I think that as far as what we see with everything, and then the classic question of the market's going to crash, I don't see it crashing anytime soon. If the market goes down a little bit, there's no way it's going to go any lower than it was at its previous highest point. So I'd say if you're a real estate owner right now, or if you're considering being a real estate owner, long term, you're in a very good position.
Yeah, well, it's a great summary. All right. So